Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on profit in equities. In this video, we'll be talking about Ambareesh Baliga's top stock picks for the year 2019. Now, for those of you who do not know, he is an independent market expert of high repute. Please watch this video to know more. Now, the first stock on the list is Bac Limited, which is available at Rs 596.45 and the face value for it is 2. The target price here has been set at Rs 1080.00. The symbol for it is BSE. Now, Bac Limited is an India-based stock exchange company. It provides a transparent market for trading in equity, debt instruments, derivatives and mutual funds. The company consists of two business segments, which are stock exchange activity and depository activity. Now, this is the oldest stock exchange in Asia and has strong traction in new business initiatives. The company witnessed a strong business with an average daily turnover growth of 90% and 1387% in its currency derivatives and India International Exchange Limited segments to Rs 32,668 crores and $630 million respectively for H1 of FY 2019. The exchange also introduced the commodity derivative segment on October 1, 2018 and became the first universal exchange in India offering one-stop solutions for all financial needs. The company is also setting up a new power exchange in association with PTC India and ICICI Bank. The company has been launching various product offerings by entering into domestic and international tie-ups for related product launches to enhance and keep its business in momentum despite stiff competition. Management believes this is an investment that will pay off in the medium to long run. Now, looking at the one-year chart, the company has been an underperformer and a lot of wealth has been destroyed here. The company is a borderline stock between a small cap and a mid cap with a market capitalization of 3,109.24 crores. The EPS of 42.50 translates into a price to earnings ratio of 14.03, which is largely in line with the industry PE of 14.74. The price to book ratio of 1.12 is also not wildly expensive. The current ratio for BSE stands at 1.9350, which is slightly on the higher side, and the return on equity is 0.0708. One very strong factor for this company is the dividend yield, and it stands at 6.04%. The company has a debt to equity of 0.3322, whereas the debt is an overall amount of 9.72 billion rupees. Now, the second stock on the list is Upn Limited, which is available at Rs 783.45 and the face value for it is 2. The target price here has been set at Rs 940. The symbol for it is UPL. Now, UPL Limited provides crop protection solutions and is engaged in the business of agrochemicals, industrial chemicals, chemical intermediates and specialty chemicals. The company's segments include agro activity and non-agro activity. Now, UPL is among the largest one-stop crop protection solution providers. It is well poised to benefit from the attractive prospects in Latin America. Europe is also expected to emerge as a major growth driver over the medium term, especially post the Arysta lifecycle amalgamation. Both UPL and Arysta complement each other well in terms of their crop portfolio and geographical presence. The combined entity thus would become the fifth largest agrochemicals player in the world. Now, looking at the one-year chart, the company has been choppy throughout the entire year. The market cap of the company is 39,904.45 crores, which means the company is a large cap one. The EPS of 41.15 translates into a price to earnings ratio of 19.05, which is much cheaper when compared with the industry PE of 39.16. The price to book ratio of 4.3520, however, is on the higher side. The company has a current ratio of 1.7835, whereas the return on equity for this stock is 0.2460. The dividend yield is 1.02, whereas the promoter holding is on the lower side at 30.43%. Overall debt on this company's balance sheet is 88.51 billion rupees. This leads to a debt to equity of 0.9720. Now, the final stock on the list is Laxmi Cement Limited, which is available at Rs 288.00. The face value for it is 5 and the target price here has been set at Rs 480. The symbol for it is JKLAKSHMI. Now, Laxmi Cement Limited is a holding company and is a manufacturer of cement. Now, the company has doubled its capacity from 5.3 MTPA to 10.7 MTPA since FY14, and this is expected to go up to 11.3 MTPA by FY19. capacity utilization of sub 70% gives JKL significant headroom to grow. Additionally, the company has 6 MTPA of expansion potential across its existing plants. On the back of this, Ambareesh Baliga expects volumes to record 8% CAGR over FY17 to 20. JK Laxmi Cement's cost efficiency parameters are comparable with the best in the industry. It has recently commissioned 7.5 megawatt of waste heat recovery and is in the process of commissioning 20 megawatt through a captive power plant by FY19 at its facility in the east, which is 25% of total capacity. The management expects cost savings of rupees 180 to 200 per ton from these projects. This translates into an impact of rupees 50 to 60 per ton on reported EBITDA per ton. Now looking at the 1-year chart, this company has also been a severe underperformer throughout the entire year. The company has a market cap of 3,388.90 crores, which means that the company is a borderline stock between a mid cap and a small cap. The EPS of 5.44 translates into a price to earnings ratio of 52.94, which is much more expensive when compared with the industry PE of 34.60. The price to book ratio of 2.33, however, is reasonable. The company has a dividend yield of 0.26%, whereas the promoter holding is below average and stands at 45.94%. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.